Good morning, everyone. Thank you for attending our webinar today. Is your nonprofit prepared to receive and invest cryptocurrencies? We really appreciate everyone taking the time to carve out about a day of your day today to really learn about this hot, important topic that is obviously impacting a lot of organizations for the nonprofit industry. So I'm going to turn it over to Zena, who's going to start giving a little bit of the details on CP and so on and so forth, and then we'll go ahead and dive in along with Omid and Caitlin. So Zena.
Good morning, everyone. My name is Zena Metzger, and I'm an audit senior here at GRF CPAs Advisors, and I'll be today's session moderator. I'd like to start off today with some quick housekeeping items and explain what you'll need to do to earn CPE credit today. Participants seeking CPE credit must complete and submit a short evaluation survey that will appear automatically following the webinar. You'll be asked to recall 3 words in order to receive your certificate. Keep in mind that they will not be provided again. If you have any technical questions or issues during the discussion, please use our chat function to speak with our administrator for assistance. The slide deck and recording from today's discussion will be available on the event page on our website. Technical support and CPE questions may be addressed to Nathan at nmckelvin@grfcpa.com. Today's learning objective is to provide attendees with a better understanding of cryptocurrencies and how to manage digital assets. I will now introduce our speakers for today's webinar. Ricardo Trujillo is an audit partner with over 20 years of experience. He has proven expertise in assurance and advisory services, and his nonprofit and for-profit experience spans across a variety of organizations. Ricardo is also a part of the firm's Information Technology Initiative. Caitlin Miller is a senior manager in the nonprofit tax department who works with a variety of tax-exempt organizations. Caitlin also serves as the chair of Women on the Move, GRF's Women's Leadership Initiative formalized in 2019. Omid Mohebi is a nonprofit audit manager with over 10 years of experience. Omid also serves as board treasurer and chair of the finance committee of a prominent nonprofit organization in Washington, D.C. I will now turn the presentation over to our speakers.
Thank you, Zena, for the nice introduction. So yes, we have a jam-packed agenda today. It's a really interesting topic, as we all have heard on the street about cryptocurrencies. So as we can see here, we're gonna give a brief description about what cryptocurrencies are, what are some of the specific issues that are relevant to the nonprofit organizations, what are the pros and cons. I know a lot of organizations have been considering or have been reached out by potential donors to receive cryptocurrencies as a form of a donation. So clearly we're going to talk about that. You know, should you not? And if you do, what should you be thinking about? The accounting and auditing considerations. I mean, clearly that's something that's a heavy item on the agenda as well. What kind of policies and procedures organizations need to really be thinking about. And also when the audit time comes, you know, what is it that auditing firms are looking for? What are we looking for as an audit partner with our clients to be able to feel comfortable about the treatment of these cryptocurrencies? And then, of course, that's why we also have Caitlin on our webinar today, because there is also tax implications that organizations need to be thinking about. You know, how is it reported on the 990? What needs to be done in addition to the regular reporting that is obviously done on a regular day-to-day basis. And then we'll wrap up with some good key takeaways for everybody to take with you to think about. But nonetheless, we're here to help along the way, and not just during this webinar. And also, I want to point out that the chat function is present right here. So if anybody has a particular question as the presentation is happening, feel free to type it in the chat. You know, Omid and Zena and Kaylin, we're all going to be looking at that proactively. And if we have a great moment to answer any of your questions, that's what it's all about. So with that, I think that takes us to our first polling question, because clearly we need to make sure that we're all engaged and you get your CPE credit. So I'm going to turn it over to Zena to go over that polling question, and then Omid will kick it off with the beginning of the presentation. Thank you. Zena?
All right, for our first polling question, has your organization received cryptocurrency yet? The options are A, not yet, B, what's cryptocurrency, C, yes, or D, we've been approached regarding receiving cryptocurrency. Please take a moment now to answer. While participants are submitting their answers, I'll provide the first CPE word. The first CPE word is currency. If you want to receive CPE credit, please jot these words down because you will need them for the survey following the webinar. Again, the first CPE word is currency. All right, so taking a look at the results, it seems a lot of you have not yet received cryptocurrency with 75%.
And these are interesting percentages. Obviously, a little bit and Kaylin pitch in, but I definitely see these numbers start to weigh in on the yes, you know, or we've been approached regarding receiving cryptocurrency. Clearly, the second option was kind of like making it fun and engaging for everyone to really like, okay, what is cryptocurrency? But it's good to see these percentages, and I think we will see more and more organizations being approached, and this is why we're putting together this presentation, to make sure that hopefully you are all ready to, in the event if somebody comes across and says, okay, we're going to obviously provide you with this particular donation and it's going to be in the form of crypto, then you are all prepared to obviously do that, and you're not scrambling to figure out what needs to be done. So good to go. All right, Omid, it's all yours.
Thank you, Ricardo. Thank you, Zena. Good morning, everyone. Great to be with you today, and thank you for joining us on the webinar today. So we're going to start off the discussion with just a very basic overview of what cryptocurrencies are. And I know that we just saw in the survey that something like 2 or 3% of the attendees today not really sure exactly what they are. So just think of cryptocurrencies as a virtual digital form of currency with no physical form. So you're not going to see the equivalent of a $5 note for cryptocurrencies. They're virtual, they're digital, and they are traded on a virtual exchange. The way cryptocurrencies function and the way cryptocurrency markets function is through a technology called blockchain. Now, we're not going to go into too much detail into blockchain technology today and talk about computer programming, but I just wanted everyone to know, because you would have heard that term, what is blockchain technology? Think of blockchain as just a network of databases connected together. And these databases, using blockchain technology, ensure the integrity and the security of data and the integrity and the security of transactions taking place. One thing to point out about cryptocurrency markets is they are decentralized and unregulated. So they're sort of a global form of currency. They're not subject yet to regulation by any particular central government or any particular regulatory body. Now, that may change in the future, where there's so much usage that individual governments will start regulating it more strictly. But right now, it's generally pretty deregulated and decentralized. Now, you would have all heard of Bitcoin, I assume, but there are many, many other forms of cryptocurrencies on the market today, and there are new forms coming online on a monthly basis. So Bitcoin and Ethereum are some of the better known cryptocurrencies. The way new cryptocurrencies come into the market is through a digital process called mining. So if you hear the word mining with respect to cryptocurrencies, that doesn't mean that, you know, someone's digging a mine somewhere out in West Virginia. It's the name given to the computer process and the technology behind coming up with a new form of cryptocurrency. So let's now look at some of the issues that are particularly relevant to nonprofits. Now, I did see through the survey that I believe 10 or 11% of the attendees today, so that's quite a significant number of nonprofits, have already been approached about being given cryptocurrency donations. And we're just at the beginning. So this number is going to increase over the next year or two. So donors will come to you and they will want to make cryptocurrency donations, and you may wish as a nonprofit either to liquidate those immediately, so you just get the cash, or receive the cryptocurrencies and hold on to them in the form of investments. What's clear is that cryptocurrencies are here to stay. If you think back to 5 years ago and you started hearing about cryptocurrencies and Bitcoin, and it just seemed like, yeah, it's just a fad and it's going to go away, and a lot of people are going to lose money, and well, that hasn't happened. Yes, the markets have been very volatile, but it's increasingly clear that they're here to stay and they're becoming more mainstream and more acceptable. So the lesson is, let's accept that and also look at all these potential donors that are out there and just be ready. So as part of that preparation, nonprofits need to now get ready for the accounting treatment, the auditing treatment, as Ricardo mentioned before, but also in-house, there are certain management skills that need to be enhanced. Governance needs to be informed of the relevant standards and the relevant issues, and we'll talk about those later. And also implications for overall business strategy in the long term. If you have significant investments sitting on your statement of financial position as a nonprofit, and right now it's in money markets and mutual funds and so on, going forward, you then say, oh, we're going to have a revised investment policy where, say, 5% of our investments are going to be in the cryptocurrency market. So we're going to keep our exposure low, but we do want to spread our risk. So that's certainly something that nonprofits will increasingly consider. Now, one of the leading donation platforms in the market right now for nonprofits is called the Giving Block. And I do know that, having looked at the Giving Block's website and also some of the questions that some of our attendees today submitted at the time of registration, that a number of you are already working with the Giving Block. And we'll talk about how the Giving Block functions and similar organizations a little later on. But let's look at some statistics. So the Giving Block has predicted, and it's estimated, that it will raise approximately $1 billion for nonprofits, just for nonprofits, because they work just with nonprofits, in 2022. So that is a significant value of contributions and donations that is likely to increase over the next few years. Let's continue with some stats. Just like we have the Giving Tuesday, there is now a Crypto Giving Tuesday. And the last one occurred in November of 2021. And the Giving Block itself, and these are stats which they have provided, which is why we're using them, in one day on Crypto Tuesday raised $2.4 million of gifts in cryptocurrencies just for nonprofits, with an average donation of $12,600. And many of these donations were not just from high net worth individuals. They were from just normal people who had some cryptocurrency that they wanted to donate. And they were also through the younger generation, millennials and Gen Zers. Fidelity Charitable, which I know many of you are familiar with, a very well-known organization with a very well-known donor advice fund, have also estimated and reported, a 5-fold increase in the volume and value of crypto donations from 2020 to 2021. Now, we're not going to go too much into why individuals give donations to cryptocurrency. There may be a number of reasons. There may be tax benefits to the individual giving the donation, and many of them are just very charitable. In the same way, they make contributions in US dollars to their favorite nonprofits. So we're not going to go into too much into that. Well, what's clear is that the section of society that's particularly fond of using cryptocurrencies are the younger generation. Gen Zers, millennials, teenage sons and daughters. And I'm sure we've all had, a teenage son or a daughter or a nephew or someone emailing us articles and saying, oh, you got to buy cryptocurrency, you've got to buy Bitcoin. So I think this is a good point just to get a feel for, and just add a little perhaps informality to the webinar. Maybe you can all please type into the chat which member of your family or someone else who has told you about cryptocurrency over the past year or insisted that you buy cryptocurrency. And if you have a funny anecdote that you can type into the chat, we'll take a look at that. So let's see, we've got brother, friend, interesting responses coming in here.
Yeah. And I think as you're looking at those responses, Omid, you know, it clearly is also something that's gonna eventually take off. It may, who knows, in the future become the worldwide currency, just as the dollar is right now. And it only takes a few Fortune 500 companies to start accepting cryptocurrency as a form of payment. I know we all heard Tesla with Elon Musk kind of like saying, okay, we're now going to be able to take crypto so you can, you know, buy your own Tesla. So it only takes certain big organizations to start, you know, accepting this as a form of payment for this obviously new way to start taking off. It already is taking off, as we can see here with the stats that you're showing, Omid. Something
Absolutely.
I want to add.
Great point, Ricardo. And let's just look at some of these responses, because this is great. Brother, friend, brother again, coworker. Jamie says, my son, he gave me a complete overview, but I still don't completely understand. You're not the only one, Jamie, don't worry. We hope after the end of this webinar, you'll feel much better and you can go back to your son and impress him with your knowledge. Jill Myers, who I know very well, says her son, his friends are making and losing value daily with swings in value. Laura, nice to see you here, son, 17-year-old son. So as we can see, there are many individuals who, not just in terms of their nonprofit daily work, but also in terms of their family life, they're getting introduced to cryptocurrencies. So that's very interesting. And thank you for typing those into chat. So now we're going to go on and look at some other interesting implications for nonprofits. So according to the Fidelity Charitable, 3/4 of millennials consider themselves philanthropic. And that's compared to 45% of the total population. So the newer, younger generation are more concerned about and more passionate about the causes they believe in, and they're more active in the cryptocurrency market. So this is a brand new donor base for many of the nonprofits out there, which you should be looking to attract. We talked about the fact that they're increasingly mainstream, and it's not just your son and daughter talking about Bitcoin over the dinner, you know, while you're trying to enjoy your roast chicken and have a proper conversation. And we did talk about also that it really is about attracting a new donor base while maintaining your existing donor base. So this is not about saying, oh, we're going to forget about our existing donors who've been so good to us. No, you keep those, but you try to attract new donors and expand your donor base. So the main question for nonprofits will be, do we accept cryptocurrencies and hold on to them, or do we liquidate? In many ways, it's very similar to the concept of donated stock. For those of you who work for nonprofits where you get donors giving you donated stock, you probably have an internal policy. Do we liquidate immediately, or do we hold on to it? And that's an internal decision. And it's a very similar decision-making process for cryptocurrencies. So let's just look at a few nonprofits. And believe me, I have looked at the list just this week of the nonprofits who are accepting cryptocurrency, but this is just a few of them who are currently accepting cryptocurrency. Save the Children. I saw just the other day that Susan Komen has began to accept cryptocurrency donations. International Medical Corps, No Kid Hungry, and American Cancer Society. And the list is really much, much larger than this, and it's going to grow exponentially.
Yeah, just a matter of time as this grows. And that's why it's important for organizations and management and governance to really be ready and prepared to make sure that you don't want to let a donor go just because you're not ready to obviously have crypto as a form of a donation. So very important. Thank
you, Ricardo. So what we don't want to do is to say that, oh, cryptocurrencies are all wonderful and everything is, you know, rosy and nothing to worry about. There's no, you know, nothing to be concerned about. So we're going to look at pros and cons, because we do want to give a balanced approach, and we do want to have a balanced discussion to look at the overall picture. So the pros, we talked about many of them. You want to increase your source of funds. You want to expand your donor base. One of the benefits of cryptocurrencies is that they are easy to use for both smaller nonprofits and larger nonprofits, because if, you know, people from around the world can go and make donations to any nonprofit they want. And because of the unregulated decentralized nature of the currency, it's much easier for someone who's in another continent to make a donation to your nonprofit because they care about your cause. Now, if someone is in a country in in Southeast Asia, they may not be able to transfer US dollars to your nonprofit in a very easy way. However, because of the global nature of, say, Bitcoin or other cryptocurrencies, it's much easier for them to make that payment out of their wallet, their cryptocurrency wallet, into your nonprofit's bank account. But let's look at some of the concerns. We talked about digital mining. So all those network databases, all those computer programmers trying to come up with new forms of cryptocurrency, that uses energy. And of course, it has a negative effect on the environment, greenhouse gases, and so on. And we'll talk about that a little bit more later on. Let's not pretend cryptocurrency markets are very volatile. So Jill just said that her son, I believe, some of his friends, they lost some money, they made some money. Now, over time, as we all know, most of us know, is that the markets, the value has gone up significantly. You know, if someone had bought Bitcoin 5 years ago, depending on how much they bought, they may be able to retire now. But let's not pretend that the markets are not volatile. They are. Cryptocurrency markets have always been volatile, and they will probably continue to be. So that's certainly a risk for those nonprofits that want to maintain crypto assets as investments. And of course, there's challenges with technology and understanding how the markets work. And we'll talk about crypto exchanges. If the nonprofit decides to keep cryptocurrencies in an account on a crypto exchange, the staff need to understand how those exchanges function. So there's a new kind of technology, a new area, so there's a training to be done and so on. Now, one of the questions we had from one of the attendees today at the time of registration was specifically about the gift acceptance policies. Now, if your nonprofit decides to accept cryptocurrencies, you really need to beef up your gift acceptance policy and make sure that you formally document a number of items that you would probably do in a very similar way for donated stock. So you want to be very clear to document how often and what is the value of cryptocurrencies you're going to accept. Is there a minimum threshold? Is there a maximum threshold? What types? Are there particular kinds that you feel are more appropriate for whatever reason? Do you liquidate those immediately upon receipt, or do you hold on to them? Do you use third-party processors such as BitPay and the Giving Block? Do you use crypto exchanges such as Gemini, or do you use donor advised funds such as Fidelity Charitable? These are all options. So, you know, the policy needs to be very clear so everyone's on the same page. And of course, you need to have some kind of good internal controls in-house. Make sure there's a good review and approval process, both before the contribution comes in and after the fact. So if a donor comes and approaches you and wants to give you $100,000 in cryptocurrency, do you have to vet that donor and make sure you know who they are? Once you decide to accept cryptocurrencies, make sure you tell your donors about them. If you don't spread the word, people are not going to know. So you've got to market it, you've got to put it on your website, send emails out to all of your donors. Make sure you tell people, and make sure you include the appropriate cryptocurrency logo on your website. Now, I do know that organizations such as the Giving Block, when they partner with a nonprofit, you can paste an icon on your nonprofit's fundraising page where the donor will just click on that icon and they will be rerouted to another page where they make the cryptocurrency donation. So you've got to make sure that you spread the word. Make sure your donors know, your existing donors and any potential new owners. Next slide, please. So we're going to look at the three main options if the nonprofit wishes to receive cryptocurrencies, but liquidate to cash immediately. And I would assume that would be the case for the majority of nonprofits. They don't want to get involved, at least right now, with the risks of holding on to crypto assets. They say, okay, we'll take the contribution, whether it's $100 or whether it's $100,000, but we just want the cash. And if we have to pay a fee to an outside service provider, so be it. So the options really depend on the size of the nonprofit, and each one is more appropriate for specific nonprofits. Let's look at option number one. Use of an outsourced third-party payment processors. Now, again, I did see that a number of the nonprofits on today's webinar are already working for organizations such as the Giving Block. So Giving Block and BitPay are two examples of third-party payment processors. And these organizations are really good options for smaller nonprofits that expect to receive generally relatively lower value donations and also have limited internal staffing capacity. So you're essentially outsourcing the whole process. The donor gives a contribution, the contributions gets liquidated, the nonprofit receives the liquidated proceeds in their bank account. The third-party processor also automatically sends out a contribution receipt to the donor. Of course, there are some fees to pay to the third-party payment processors. That's how they make their revenue. And the fees will generally vary depending on the size of the nonprofit and the size of the donation. So that's really an agreement that is negotiated between the nonprofit and the third-party payment processors. Or they may have standard agreement, the standard fees, and say, you fall into this category and these are the fees that will apply. So this is a very good option for smaller nonprofits that just want to outsource everything. They don't want to get involved with the everyday nitty-gritty. So let's look at option 2 now. So the option 2 is using a crypto exchange. And an example of a crypto exchange is a well-known firm called Gemini. And essentially, you are managing most of the operations in-house. And this is really better for nonprofits that have larger staffing capacity. They have the staff in-house so they can train to use these crypto exchanges. And as we said here, crypto exchanges operate in a very similar way to stockbrokers. So essentially, you will have your crypto assets in an account held with the crypto exchange, and then you can buy and sell as you wish. So they will take your instructions. And if you sell and you want to liquidate to cash, you will receive the cash in your nonprofit. Again, there are fees to pay depending on the size of the donation and so on. The advantages here are because you're managing a lot of the work in-house, the fees you pay tend to be lower. However, on the flip side of that, managing in-house means you need the staffing capacity and you need to train your team on how to trade and use these crypto exchanges. Now let's look at option number 3 on the next page. So the third main option is the use of donor advised funds. And we did say before we spoke about Fidelity Charitable, who are a very well-known organization, and they've been around for a very long time. They actually have donor advised funds, which specifically deal with cryptocurrencies for nonprofits. So essentially, the donor will give a cryptocurrency donation to the donor advised fund. They will specify their preferences about a particular nonprofit or a sector that they wish the funds to go to. And then the donor advised fund will give those funds either as a grant or a contribution, whatever you want to call it, to that nonprofit. This particular option is really suitable for much larger nonprofits who expect to receive much higher donation values. So you can see that the option really depends on the size of the nonprofit, how much you expect to receive in contributions, and how much of the work you want to do in-house. Let's talk a little bit more about environmental concerns. We talked about the energy consumption. We talked about the continued use of computers. Well, that all means more greenhouse gases, higher carbon footprints. And because these databases and these computers are being used constantly, pretty soon they got to be replaced, right? It's like everything else. The more you use something, the faster you got to get rid of it. So in addition to the greenhouse gases, you're also dealing with physical electronic waste. Now, the good news is that the industry has caught up with this, and they know that there are these concerns out there, not just among nonprofits, among everyone, about the environmental concerns related to cryptocurrencies. So there is a council called the Bitcoin Mining Council, which is aiming to be very transparent about the energy consumption in the industry. So they're publishing statistics. So they want to say, look, we know there's a problem and we want to do something about it. There's also the Crypto Climate Accord, who have a goal of running the technology on 100% renewable energy by 2025. And they also want the industry as a whole to have net zero emissions by 2040. Now, whether or not they achieve those goals, we'll see. But the good news is that the industry is waking up and setting these ambitious goals for themselves. And with that, I'm going to hand it to Zena for the second polling question. Thank you.
All right, we have come to our second polling question. What are your organization's main concerns in regard to receiving cryptocurrency donations? A, digital waste. B, volatility of cryptocurrency. C, tax and accounting treatment of the donation. D, all of the above, or E, unsure. Please take a moment now to answer. While participants are submitting their answers, I'll provide the second CPE word. The second CPE word is exchange. If you want to receive CPE credit, please jot these words down because you will need them for the survey following the webinar. Again, the second CPE word is exchange. EXCHANGE. All right, so it looks like the poll has come in and 50% say all of the above as far as main concerns.
Excellent. Thank you, Zena, for sharing the answers. Yes, clearly not surprised. There's a lot of concerns right now in terms of receiving cryptocurrency as a donation. And it shows over here the volatility, the tax and the accounting treatment. All of these are basically areas that organizations need to really think about on how to encompass or embark in this new endeavor here. So let's get into the next section here of the presentation, which is getting into the accounting treatment and also the auditing perspectives for this cryptocurrency. So if we go to the next slide, it'll take us to the accounting and auditing perspectives here. So, I mean, it's clearly a matter that there's a question and a situation right now that has emerged that it's been challenging for accountants, for controllers, for CFOs, also how to use these assets and how it has become increasingly common. And the AICPA and the CIMA has set up now actually a good area, a practice aid area that contains a lot of information, non-authoritative guidance developed in terms of helping organizations and helping groups understand how to now treat this particular ways of donation, the cryptocurrency. And some of the new added areas in this month actually address, the contracts, how to move the cryptocurrency. Does it include derivatives, but the borrowing, the lending of the crypto assets, the crypto asset mining activities like Omid was talking about. And, some guidance obviously was first issued, as we say here, back in 2020. And the FASB has now started to put this on the agenda. They have realized that this is something that's really going to start to take off. And as I said at the beginning of the conversation, it only takes just a couple of the Fortune 500 companies to start being able to accept cryptocurrency as a form of payment. So FASB has come in and said, okay, we got to really start thinking about this and how we're going to guide organizations on how to record these particular transactions. And they have put this on their agenda December 2021. So obviously it's very recent that they started talking about this and addressing it. So there's a lot more information that obviously is going to keep coming out of these meetings and having people's perspectives and feedback, and it's just gonna become a lot more available. But I would definitely invite everybody to spend some time at the AICPA and the CIMA, on the practice aid that they have put together, because that definitely has a lot of good information that you all can look into, and it might answer a lot of the questions that you might have already right now. But again, it's a fast evolving area. And the guidance is continuously going to change. We have no doubt about that. So if we go to the next slide, again, we talk about that the FASB actually, this is an interesting topic right here, clearly, because most people would think of cryptocurrency sort of like a form of investment, right? But in reality, and it is, but FASB has come in and said that they have defined this more of an intangible asset. So it basically follows the FASB ASC 350 intangibles, goodwill for the goodwill. So something to think about here is that when the organization receives this particular cryptocurrency as a form of payment or as a form of donation, then the organization has to record this as an intangible asset. So it's not going to be an investment. It's not going to be cash, obviously, because it isn't cash, but it's going to be an intangible asset. And that intangible asset is going to be recognized at that particular market value at the time of receiving it, whether you use one of these three options that Omid was talking about. It's going to be recorded as an intangible asset, and it's going to be subject to the impairment. So the organizations have to come in and really decide, okay, what's the value of that asset, you know, a year from now, for instance, or you're a year later after you received it. Is it higher? Is it lower? Do we need to? And the market volatility, obviously, it's something that comes into play. You know, if you receive crypto that's right now at about $40-some thousand, and a year down the road, now this thing is only worth 20,000. Okay, what do we need to do? And that's when the whole impairment situation comes in, and the analysis of that impairment now comes into play. Okay, but you still have to follow those processes and procedures, and that's when it goes into really updating those policies and procedures within the organization to make sure that the right codification is being followed and that these are recorded appropriately the way they need to be recorded. Now, one other thing that it's important to note here in the last bullet is that if that receipt of those cryptocurrencies has to do with delivering goods or services, now you're looking at the ASU 2014-09, which I'm sure a lot of people are aware of, the revenue from contracts with customers. You know, so if an organization is coming in to actually pay for those goods and services by the use of crypto, then how is that valued? Well, clearly it's valued based on the transaction cost, as it says right here, you know, and then it's going to have to be thought or brought into consideration on how that's being accounted for. So you may have a couple of ASUs or codifications that the organization needs to follow: the intangibles, the revenue from contracts with customers. So again, it's a little bit of a situation that needs to be thought of as these organizations really start to receive this particular way of payment or donations, if you will. If we go to the next slide, then we talk about, you know, the test for impairment. I already brought that up already. It needs to be analyzed regularly to see the value of that particular intangible asset, you know, so I'm not going to go into that. You know, the FASB 350, clearly, if you all can go and take a look at that particular codification, you can look at the examples of the factors and how the organization needs to do to be able to determine whether or not the particular intangible has been impaired or not. And then if you have to obviously record a write down of that particular asset. So again, it's something that needs to be analyzed very regularly. And clearly the volatility of the market, you know, of the crypto itself is going to make it a little easier to be able to decide, okay, do we have an asset and now it's only worth 20,000 and we have to do something about it? Or is this asset even worth more now? And we don't have to really consider booking an impairment or something like that, or write down on that particular asset. The exchanging crypto assets for USD. So again, it's the purchase and the sale of the crypto, something that will possibly be not a part of the nonprofit's controls operations. So it's something that probably doesn't have to be followed. Okay, account for the sale. So that's another one, the FASB 610, another income. So the gains and losses, the recognition of non-financial assets. So again, I would encourage all the organizations to really read up a little bit more on this. Obviously, FASB ASC 610 could be a whole presentation in and of itself. So it's something to really think about on how those particular assets need to be recorded within the organization. And clearly the gain or loss that is being, you know, presented outside of the revenue, because if the organization decides to liquidate these particular assets at either a gain or a loss, then it needs to be really presented appropriately within the statement of activities of the nonprofit organization. If we go to the next slide, I think we're getting close to the fair value measurement. I know we talked about this. So then also FASB ASC 820, how is the value of that particular crypto being followed? And clearly this is an easy answer here because most of this is level 1. Anybody can go any second to a finance Yahoo page and really type what the value of a Bitcoin is and be able to find it right away. So that's why it talks about being a level 1 for value. But then you're going to have obviously the various disclosures as how the crypto is being valued and so on and so forth. So very similar to the investment piece of it. Okay. Next slide, please. The auditing implications. Now we come in as an auditor and we're trying to understand, okay, what has the organization really, have they received any crypto as a form of donation? Are they holding any on their statement of financial position? So we got to come in and now take a look at, okay, what's the complexity? So as the audit firms are going to the client acceptance and continuance, we need to understand what the processes and procedures the organization currently has to be able to allow us to make a decision whether or not we want to continue servicing the client as an auditee or not. And then also the new compliance and independence risks. You know, the audit team, now we have the issue of like, okay, we may have a team member that also is holding that particular crypto. And is that going to be a bias situation? Is that going to create an independence situation within the firm and the particular auditee? So all of these things we have to think about. The competence and the resources of the firm that the organization is using to be able to conduct this particular audit. Do they know enough about the treatment of this cryptocurrency transactions to be able to come in and actually audit them? Because if they don't, then the nonprofit needs to really think about, and the nonprofit, really, the organization needs to be asking those questions. You know, partner, do you guys have an understanding of what's happening here? Do you know how to treat this cryptocurrency? What do we need to do here? And those are conversations that need to be happening right now, especially if the organization is thinking about receiving cryptocurrency as a form of payment or as a form of donation. Next slide, please. Again, adhering to the applicable professional standards. So these are all, you know, skills. We talked about the skills to get the sufficient understanding of the entity, the evolving guidance. So audit firms need to be absolutely very involved and being on top of the guidance that's coming out pretty much weekly or daily, I would say, to be able to understand this and be able to guide their clients accordingly. So again, something to really think about as we are all engaging with your audit firms in the future audits, okay? Next slide, please. Management and governance. So this is important right here. We have to understand that management needs to be aware of its responsibilities to make sure that the internal controls surrounding the acceptance of the cryptocurrencies is acceptable. So I know Amir gave an option about number 1, you know, where you completely outsourced everything and you let them deal with it. Well, that brings another set of risks. You know, what's the organization doing to be able to manage that outsourced organization? Are they receiving SOC reports, SOC reports, you know, from the third-party providers, kind of like what it says here? That's important. So almost like that the organization outsources the investments to an outsourced party. Okay, now there brings another set of controls that need to be implemented to feel comfortable that that particular organization is doing what it's supposed to be doing to protect the data, to protect the crypto, to protect everything that needs to be done. So again, formally updating the financial and accounting policies that we talked about. So something, is it going to liquidate it immediately? Is it going to hold it as an intangible asset? What is it going to do with it? What's the main intent when those cryptocurrencies are being utilized? Appropriate training, internal training within the finance and accounting teams. They need to hopefully have a good understanding on the valuation of these particular assets, intangible assets, and so on and so forth. So we talked about the evaluation of the third-party providers. You know, do they have proper controls? Let's obtain those SOC reports to make sure that there is no significant issues or significant findings on those particular organizations that the organization needs to be aware of. And of course, the appropriate oversight of governance. They also need to be involved, and they also hopefully need to have an understanding of what's going on and how these are being treated within the organization. Okay, next. I think that takes us now to the next section, which is the tax treatment, which is the most fun part of the whole presentation.
Definitely.
So with that, yeah, I'll let Caitlin talk about the tax treatment and And of course, feel free to pop any questions, and we'll hopefully with Omid, we'll be monitoring those and be able to answer them if we know the answer. Okay, we're still learning along this way too, and we're trying to advise our clients, obviously, with everything that's coming up. So, Caitlin, all yours.
Awesome. Thank you, Ricardo. I'm going to spend the last couple of minutes together going over the tax treatment for nonprofits who are either accepting donations of cryptocurrency or just holding it as an asset. So first, back in 2014, the IRS issued Notice 2014-21, in which they provided guidance on the tax treatment of virtual currency transactions. And then again, in October of 2019, they issued subsequent guidance with a frequently asked questions section on virtual currency transactions. So the key takeaways from those two are the IRS confirmed that virtual currency will be treated as property. So the general principles applicable to transactions with property are going to also apply to transactions with the virtual currencies. The guidance also clarified that a taxpayer who's receiving virtual currency as payment for goods or services is going to account for the fair market value of that currency when calculating gross income, which is consistent with what Omid and Ricardo were just going over together. So getting into the donor acknowledgement responsibilities. So a nonprofit is going to be accepting a donation of Bitcoin or a similar cryptocurrency. What are the requirements? I'm going to go through three different thresholds with you. So the lowest is $250. So for a donor to properly claim a tax deduction of $250 or more for a donation of virtual currency, the charity needs to provide the donor with contemporaneous written acknowledgement. So this is that standard thank you letter, acknowledging the name, date of donation, no goods and services provided in exchange. Hopefully everybody's already familiar with that one. Nothing special here for that. The next threshold up at $500, the donor is going to need to complete Form 8283, which is the non-cash charitable contributions filing, and just Section A in this case. That will be attached to that individual's income tax filing. In this case, the nonprofit is not doing anything in addition to that letter that we talked about in the first bullet point. Moving on to a donation of $5,000 or more for virtual currency. If you could go back one slide, please. In this case, there's going to be a little bit more work that has to be done. So the donor is going to need to obtain a qualified appraisal and present that form to the organization for signature. So the qualified appraisal is required for donated property over $5,000. It's not required for donations of cash, inventory, publicly traded securities. So it's just an extra hoop that the donor has to jump through to get that qualified appraiser to assert to the value of the crypto being reported on the 8283, which may be a barrier for certain donors. And then for the signature acknowledgement from the nonprofit, I just wanted to point out that the signature is just acknowledging receipt of the virtual currency and the date that the donation was given. And then noting that the organization understands the reporting requirements for a disposition of that property. It is not the organization certifying the value from that qualified appraiser. Okay, so the Form 990 reporting, thankfully this area is pretty straightforward. So if a nonprofit receives a donation of Bitcoin or cryptocurrency in the current year, on Part 8, Statement of Revenue, it would go on line 1G, which is the line for non-cash contributions, just a subset of total contributions for the year. If they're still holding it at the end of the year on Part 10, the balance sheet, we would put it on line 14, the intangible asset line, consistent with the guidance that Ricardo just reviewed. And then Schedule M would be triggered if total non-cash donations throughout the year was 25K or more. And it would just detail all of the non-cash contributions received, including the crypto. There is also a field on the Schedule M filing that asks for the number of 8283 forms that the organization had to sign that donee acknowledgement portion for. So we would report just the number of forms there. Okay, so getting into the sale of crypto and how that would be treated for tax purposes. So Generally, sales resulting in gains are not going to be subject to unrelated business income tax. They would be excluded from UBIT, and that would be, of course, unless the investment was somehow bought with debt financing. If the organization sells, exchanges, or just disposes of any of the donated virtual currency within 3 years of the original receipt, then the organization has to file 8282, which is the donee information return, and they would file that with the IRS and then also have to provide it back to that original donor who submitted the 8283 for the original donation of that virtual currency. And then just one point at the bottom, impact on the 1120 POL. So this is the filing that's required for organizations who have political expenditures during the year and would pay a tax on the lesser of the political expenditures or investment income. So for tax purposes, the basis in appreciated donated property is the donor's adjusted basis. So sale of that property could potentially result in a large tax gain for purposes of calculating that taxable investment income on the POL. And then just a few final considerations for private foundations, if there's any PFs on the call today. The first one is very similar to what we just reviewed for the 1120 POL impact. It's going to be that donor's adjusted basis for tax purposes. So again, a sale of the Bitcoin could potentially result in a large tax gain for purposes of calculating your taxable income on the PF. And then minimum distribution requirement, just an interesting tidbit here. So this is going to be that average fair market value of cash, investments, and other assets that we're required to do to calculate the distribution requirement for the year for the PF. The regulations provide methodologies for calculating cash, which we would do on a monthly basis, publicly traded securities, also monthly. And then for other assets, it's going to be generally annually. So the question is kind of where does crypto fit into those categories? If we did an annual valuation, there could be an extreme impact on that minimum distribution requirement. If the value somehow skyrockets at the end of the year, it could be out of whack and cause the PF to have to sell some of the crypto to meet that distribution requirement. So kind of because of that volatility, we think that monthly would generally be preferred there, which we think is a reasonable position to take because, you know, they're traded on exchanges where market values are readily available. And then down at the bottom there, I included a link to the IRS FAQ that I mentioned earlier. I think it's a really great resource for those that are kind of new to the space. There's about 40 or 50 commonly asked questions, and the IRS does a nice job of kind of outlaying how they would like to see those reported. And so I think that brings us to our final polling question.
All right, we've come to our third and final polling question. What tax compliance issues are you concerned about in regard to accepting cryptocurrency? Handling 8283/8282 forms. B, the 1120 poll excise tax. C, 990 PF investment income tax. Or D, all of the above. Please take a moment now to answer. While participants are submitting their answers, I'll provide the third and final CPE word. The third CPE word is property. If you want to receive CPE credit, please jot these words down because you'll need them for the survey following the webinar. Again, the third CPE word is property. PROPERTY. And the results are in. It's looking like half of you agree that all of the above are some compliance issues that you're concerned about.
Yeah, and that doesn't surprise me just because it's such a new area for a lot of nonprofits, as we've mentioned before. I would just again reference those IRS FAQs. I think they're really helpful, and just getting familiar on the guidance with tax treatment, and then getting familiar with the 8283 and 8282 thresholds and filing requirements and obligations of the nonprofit to be in compliance.
Right, and I know, Kaylin, I know there's been a good question that came up here in the chat that's talking about if a not-for-profit is using a third party to process crypto, and the third party liquidates and provides the NFP with USD, are there any tax reporting requirements that are applicable to the not-for-profit? I don't know if you would know the answer to that.
Yeah, so my understanding is it would be the same as if a donor gave stock. For tax purposes, the donor is still giving stock, or in this case, the donor is still giving crypto. So it would still be applicable even if it's immediately liquidated. It would still be a donation of crypto.
Excellent, excellent. All right, I just wanted to bring that question up because we're trying to address this as they come along anyways.
Yeah.
And we have just a couple of minutes here to wrap up the conversation, which has been very interesting, and we want to leave everybody with some key takeaways. Again, analyze the pros and the cons of accepting the cryptocurrency. Is it going to be liquidated to cash? Is it net? A lot of things to consider. Is it going to be using a third-party provider? Updating the policies and procedures. What are the donors motivated, decide to do good in addition to the tax benefits? So it's a fast evolving area. So definitely need to keep up with it and stay in the game, as we say, to make sure that that you're ready to receive these particular types of donations, because again, it's only a matter of time. And we do think that this is going to be impacting organizations very rapidly. And it's only how ready the organization is. So you might lose an opportunity to be able to receive a good donation. And without being ready, then it's going to be pretty difficult to accept. So again, the organization needs to really have the written policy for accepting the gifts. It has to cover what it will do with those particular gifts. Is it going to use a particular exchange? Is it going to use a wallet? Is it going to use a third party? And make sure that the policy includes a structure to be able to understand the gift approvals. Who's approving the gift? Who's in charge of saying, okay, this is good to go, and we're going to approve it. Let's receive it. And it's often best to really design or designate one person to approve the acceptance of those particular gifts and also the sale. For those cryptocurrencies, definitely I would consider using a third party to make these kinds of decisions easier. But then, like we said at the beginning, using that third party brings that other control aspect of okay, how are we monitoring that particular third party? And we also have seen some nonprofits actually use a committee to make sure that these particular difficult calls are made by a particular committee, kind of accepting the cryptocurrency, and then the use of a U.S. exchange trade and so on and so forth. So definitely it's something that needs to be adapted. So I'll let Omid kind of wrap up with the other takeaways, and then let's see if we have a couple of questions for others. Omid?
Thank you, Ricardo. Absolutely. As Ricardo said, the time to prepare is now. We are seeing a significant increase in the volume of activity in the market. We're having nonprofits reach out to us with questions over the past 6 months regarding cryptocurrencies that we had not seen before. And there are also players in the market who are approaching nonprofits to third-party processors who are clearly, as can be seen from some of the attendees today, who are clearly succeeding in forming these partnerships. So please reach out to us with any questions regarding accounting guidance, tax implications, any other particular questions about the cryptocurrency market. And we have done our homework, and we're determined to stay ahead of the curve in this particular market and make sure that we are well qualified to answer your questions. And talking about questions, if you have any questions, please go ahead and put them through the chat. Right now, we'll try to respond to you over the course of the webinar anyway. Caitlin, there's a question that came through the chat. It says, is the 8282 needed and excuse me if you already answered this question another way, if liquidated through a third party like the Giving Block?
So first, the 8283 is going to be the donee's responsibility to request that from that signature from the nonprofit in Section B. The 8282 is only going to be required when the nonprofit is liquidating that if it was over the 5K threshold. And my understanding, I would have to double check the Giving Block's policy, but my understanding is yes, it would still be required.
Excellent. All right. So I think that takes us through the end of the webinar at this point. We're up to the top hour at this point. So feel free to reach out to us, send us questions. We're more than happy to answer them via email or so on and so forth. But we're happy that you all carved out a good hour of your time. And not only are you getting CPE, but also learn great information about a hot topic that's definitely going to be impacting organizations much more moving forward. So thank you, everyone. Hope you all have a good rest of the day and rest of the week. And we're here to help in any way we can. We appreciate it.
All right, just a disclaimer, please remember to complete the survey that will appear automatically following the session if you'd like to earn CPE credit. Thank you again and enjoy the rest of your day.